Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it complacent because that's exactly the way the picture of the investor, the trader is coming across right now. This market is very complacent. It's almost like there's no fear of the market going down, of a major continuation of the bear market. And we're going to find out. I think things are going to materialize here over the next couple of weeks at most. But let's start off. We're going to look at the ETF dashboard and just see how did the picture look at the end of this week. Then we're going to take a look at the Nasdaq 100 ETF, the Qs. We'll look at the moving average view, take a look at the Elliott Wave picture. Also got some indicators related to the Nasdaq I want to talk about. We're going to check in on that VIX, which moved to a new low, at least a new low over the last year. Since November of 21. We'll talk about that. And then I want to focus on Apple because we've got Apple with earnings out after the market on Thursday. So the two big events that are happening, I know there's a bunch of earnings still this week, but the two big events are the Fed meeting Tuesday, Wednesday with the announcement and press conference on Wednesday, and then Apple's earnings on Thursday after the market. Okay, ETF dashboard. All right, so the previous week, we had 9 of these 16 sectors positive, 7 down. This week, 8 up, 8 down. So pretty mediocre in terms of movement, just not going anywhere right now. The biggest mover to the upside was XLC, and I think that was primarily because of Meta in there. Nasdaq Biotech down 2.2%, and now for the year, the XLC has overtaken semiconductors. They were leading for the longest time, and now they've given back quite a bit of a good chunk of their gain, let's say. Financials continue to lead to the downside. Very, very weak picture. And you just don't sense a whole lot of panic about the latest bank crisis with First Republic. I guess maybe everybody's like, oh, okay, they're gonna take it over, or somebody's gonna buy it, or whatever. But it just seems like this is a reoccurring thing that's starting to happen, it's like, no, everything didn't settle and solve in March, and now we have First Republic. We'll see what happens here over the next couple of months. But that's the picture with the major sectors that I've got up here. When you look at the index ETFs, the Nasdaq 100, which we're going to look at in detail today, continues to lead. Led this week, has led for the year. The transportation average down 2.6%. Now that was pretty weak. Let's take a look at that. Actually, I want to go right here. So here's the Dow Industrials. It was up 289 points for the week. The Dow Transports, easy for me to say, Dow Transports down 392 points, but you can see it was a whole heck of a lot lower at one point. And it's really interesting. There was a lot of negative comments coming out of the trucking companies. I read a quote somewhere, I can't remember, one of the independent truckers just saying, hey, he was doing whatever he could just to catch a load, just to keep his head above water. So I thought, wow, that's really, really interesting. And to me, it looks like the transports are starting to break down and should lead the Dow Industrials in here. I would think we are going to get the same thing happening. So they got back in sync, and then now the transports have broken this counter trend move, and it looks like they're weakening here over the last week. Okay, so let's go back and take a look at the Qs. So the Nasdaq 100 ETF was up 2.21 on Friday, 5.95 for the week. Now, the interesting thing, here's the Elliott Wave picture that I've got on it. Okay, this is what I continue to hold, that we are near the top of the counter trend move, intermediate wave 2, on the pullback. Now you look at, say, okay, well, how much have we retraced? Let me see if I can get this to play out here. Oh, it's showing up over here on the daily, right here. So we've retraced a little bit less than 50%. Okay, so here's 38%. I'm talking about 2 as a percent of 1. All right. So we haven't gone as deep as you typically think of for a wave 2. Typically you think of 50 to 61.8%, but there is no rule that says, oh, you must go X, before it's done. So it's definitely gone enough. Now we're watching the wave count to see what we got. So what was the big thing that happened here with the Nasdaq 100 this week? It punched to a new high. And I'm talking about a new high for the counter trend move from October. So for this move right here, yes, we punched to a new high. Now, a couple of things going on. Right now, I'm looking at this like we have a complex. The whole move since October is a complex WXY because it just continued to morph and become more complex. So what is a WXY? WXY is a combination of corrective patterns. Okay, you start off thinking, well, maybe we're just going to have a simple zigzag, and then it morphs into something else. And it looks to me like we're getting a double zigzag. So right now, in both of these zigzags, the W and the Y, I've got as a complex, as a WXY within there. So on this last move in here, I've got A, B, C. Now, so the real question is, what's this C wave? How much further is it going to go? Now, if you take a line and draw it across the highs here from the February 2nd high, across the high that occurred here on April 4th, this would be a target as an initial, short term. Could it push right up into here? Yes. And if it were to continue to push higher in here, I'd have to say, well, right up into this level, the August high would have to be a target around 330 or so, plus or minus, if we continue to push higher. Okay, so that is the picture that we've got going on. The other thing I wanted to point out is just look at the mess that we've had since March 31st. So here's the end of March. Here's the month of April. And look where we sit. We closed March at 320.93. We closed April at 322.56. We are up a whopping 1.63 points for the entire month of April. That's it. Pretty mediocre, very choppy. I mean, my gosh, the Russell 2000 ETF, it kept alternating back and forth every other day, down, then up, then down, then up, and it did it for like 9 days in a row. I mean, it's just very, very choppy right now. So we'll see how much further do we go. Let me just take a quick look at this C wave. Let's see what we've got. Yeah, it's really hard to say that we've got a 5-wave move for the C wave complete. It's possible that we have something going on. Now, this is 130-minute. Let me just flick to an hourly. There's definitely, 1, 2. We could definitely talk about a corrective pattern in here. So yeah, we're getting some divergence. So as we continue to push up and get up to this trend line, that may be all she wrote. Again, there is no rule that says the C wave has to be a certain minimum as relates to the A wave. Okay, so that's where we sit with the Nasdaq 100. Now, I want to show you a couple of things. Let me move this out a little bit. And now that I've got this up here, let me, where is it? Oh, here's what I was going to show you. Okay, so this is the new highs minus the new lows. So the net new highs and new lows on the Nasdaq. Now this is the Nasdaq composite, granted, and this is the Nasdaq 100. But here's the February 2nd high. Here's the February 2nd high that we had on the Nasdaq 100. And just, the net new highs on the Nasdaq just have not confirmed this move at all as we've punched higher. It's just, we're just getting this very, very weak move in here this entire time. And I came across an interesting tweet in here, a couple of these actually. I'm going to show you this one by Tom McClellan. So he's talking about the advanced decline line on the Nasdaq 100. So it's really interesting what I just showed you on the net new highs minus new lows. Well, here's the breadth. The breadth's not confirming this move either. So it's pretty interesting picture. To me, the move is a sign of weakness, which is why I think we are in the final stages of this intermediate wave 2. And of course, the next one that's coming up is intermediate wave 3, which will take out the October lows and be much stronger than what we experienced in the first intermediate wave. Okay, so that is the picture there. Now let's take a look at, I want to take a look at the VIX. Okay, the VIX was down 1.25 on Friday. So it just continues to push south. We thought at the beginning of the week, look at this, Tuesday, Wednesday, thought, okay, hey, we're going to turn. This is moving. We're going to pop above 20. And the next thing you know, Thursday, Friday, we collapse back down. So we're sitting at the lowest levels that we've had since, now just look where this marker is, 15.78. This is at the same kind of complacent, no fear levels that we were experiencing in November of 2021 before the peak, right before the peak in the Nasdaq. Okay, so pretty interesting where we're sitting right now, given where we're sitting with the counter trend move in the Nasdaq. And then Tom McClellan also had another tweet that he put out related to the VIX, which I thought was really interesting. Now he's talking about the VIX, the actual VIX, which we just showed right here, as compared to a futures contract of the VIX. And he's talking about the spread between them. So this is kind of interesting in that, look where the peaks are. Look at the August, when the S&P 500 was peaking in August. Here's the difference between the spread, the percent spread. And then we had another one here in, looks like December. It's hard to tell the actual time frame. It looks like December. And now we're at a point where we're even higher than where we were in August as we're approaching the end of intermediate wave 2. So this is very, very interesting also in terms of an aspect of what's going on with the VIX. So we'll see if we get any kind of flip here this coming week. Okay, now I want to take a look at Apple. Okay, here's the moving average view I've got of Apple. And this goes back, well, this is August. So you can see how we came down and look where it bottomed. It bottomed on January 2nd. Didn't bottom in October. It bottomed January 2nd and it's rallied since then. So here's the picture from January, okay, of 2022 all the way down to the low here. And now we're in this counter trend move up. And I think we are starting to run out of steam a little bit, okay? Now, here's an interesting aspect of this. Really thought, and it still may be playing out, I really thought that we have, when I looked at this earlier this last week, we had a rising wedge pattern in here for the end of this thrust up, and that we were breaking down out of that on Tuesday and Wednesday, and then we snapped back up into it on Thursday and Friday. Now, sometimes that happens with wedges, and sometimes they'll even flip over the top of the wedge before it just comes down. But a couple of other interesting aspects of this, so keep an eye on it. The volume, the 20-day moving average of the volume down here, right here at the beginning, this is where I'm marking this as the beginning of the wedge. Okay, 75.6 million on 20-day moving average. On Friday, the 20-day moving average is now only 51.9 million. So I'm just ballparking, I haven't done the math, but that looks like about a third drop in the percent, the entire move up into the wedge, kind of a last gasp. That's what it feels like to me in here. And then we're getting divergence. Notice how we got this divergence right in here, just over a couple of week period, maybe not even. And then we got a pretty nice little quick drop. Well, we're getting the same kind of stuff in here at the end of this wedge, between here, and also we did not, between the close on Friday and the close here on April 19th, the RSI is exactly the same. It is 68.2 and it closed 68.2 on Friday. So we're definitely getting divergence. We got a definite drop off in the volume throughout this entire wedge. This is going to be a really, really interesting week for Apple. So keep your eye on that. Okay, that's it for this week. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the YouTube channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great week. We'll talk to you on the next video.